Welcome to Small Biz Life, episode 90, Pricing Your Services.
Does this sound familiar?
Oh my God, I have so much to do today.
Don't forget to breathe.
But I have almost 400 emails in my inbox and 30 phone calls to make.
Have you looked into getting a virtual assistant yet?
Oh, and I need to schedule all my social media posts.
Did you drink anything today?
I had coffee.
Did you eat today?
Did I mention coffee's a bean?
This is Small Biz Life.
Hey guys, welcome to another action-packed episode of Small Biz Life. We're so glad you are here with us this week. If you're a returning listener, thank you so much for joining us again. And if you're a new listener, we hope that this content is so awesome that by the end of the episode, you're going to hit that subscribe button wherever you're listening.
I'm mashing it right now.
Wouldn't that mean you're subscribing and unsubscribing and subscribing and unsubscribing? Don't mash the button.
Hadn't thought about that yet. Press it once or twice, depending on what device you're on and what mouse you use. It gets very complicated.
Yeah. But in case you're new to the show, my name's Kristen Ingram. I'm a CPA and small business advisor.
My name is Jeffrey W. Ingram. I am a Gemini and IT professional.
And it's almost your birthday.
It's almost my birthday.
That's exciting.
Right. My singing comes at no extra charge.
Wow. Well, that's good because it's a free podcast. So that's kind of a good thing, I think.
Fine, then I'll double the price.
It's still free. Yeah, okay. It's mathing. Yeah, and we're going to be doing a little bit of mathing in this episode because we're going to talk about how to price your services. You know, I think a lot of times as small business owners, when we're service providers, we just kind of throw a number out there and we don't necessarily think about how much profit we want to make or even what our costs are.
Yeah.
And so we're going to talk about how to set your pricing.
Yeah. I mean, we're big fans of budgeting in real life, like for personal stuff and for business, because if you don't know how much you're spending, you don't know if you're making money. And what ends up a lot of times is you can be making money and you don't realize it because it's being expensed out all over the place. And so you're not seeing it as income like you would as an employee somewhere and then paying your bills. You're just kind of directly paying your bills. It gets confusing. So you need to get a handle on this, because when you get a handle on this, you can set a price to try and create profit.
Yes, and that's really the goal. So this is really important because we want you to think about how much you want to make rather than making whatever's left over.
Yeah. I think people look at it the wrong way and they're like, you can't, choose your profit. Or some people come up with really complicated systems on how to do profit first, but it's really quite simple.
Right. So we're gonna teach you a really simple method to do this. This is also going to help you create sales goals. It'll help you figure out how much you really need to be working, how many billable hours you need per month, and you're going to know how much your costs are to guarantee profit. And I think that's really important.
Yeah.
So let's start off first. In the accounting realm, there are really two different types of companies.
Yeah.
There are price takers, and price takers are companies where the price is set by the market. There's typically lots of competition. There's no differentiation. If you think about oil companies are price takers because the oil prices are set by the market. Oil trades every day. The price is set and you pay, you sell your oil for that amount. Price makers are companies where there's either little competition or there's lots of differentiation between you and your competition. And so because of the value that you're adding, you can pretty much charge whatever you want.
Yes. And whereas it might seem simpler, and in ways it is to be a price maker, price takers are also typically a lot more utility type of things that are just needed. So it brings in a lot of people into those areas.
Right. And so your goal is to differentiate yourself so that you become a price maker because you want to be able to set the prices in your business. Now, when you're thinking about pricing, a lot of us think revenue minus expenses equals profit, right? That's what your income statement looks like. If you go into like QuickBooks, it's always revenue at the top minus your expenses equals your profit.
And definitely the IRS thinks of it this way.
Exactly. And that's how the IRS thinks of it. However, this is the wrong way to think about things. What you should be thinking about is you should be thinking about how much profit you want to make. So if you happen to be a price taker, then you're looking at revenue minus profit, and that tells you how much your expenses should be.
Yeah. And really, that's the key to being a profitable person in a price taker scenario is you have to be judicious with the way you spend your money.
Right, exactly. Now, if you're a price maker, right, which means we set the price, then you're going to take your profit that you want plus your expenses, and that tells you how much you're going to charge.
And really, so the idea is for both of these, the target metric you're looking at when you're trying to grow your company is, are your expenses where they need to be? Is your revenue where they need to be? And you might even look at it as a percentage, of the first half of the equation to the second half. So maybe your expenses can be 15% if you're a price taker of what your revenue minus profit is. Then you're always trying to make sure that that's in balance.
Right. So you notice that and you may want to go to the show notes for this episode, go to smallbizlife.com because we're going to have
be in notes here.
Right. We'll have all of this in the show notes. But the thing is, our end result is never profit. Okay. We're either trying to figure out what our expenses should be or what our revenue should be. Okay. Because we're thinking about profit as something that is non-negotiable. And when you start to work under that mindset, you will always be profitable.
Yeah. And you'll always know, can you afford this new toy or not? You'll always know, what do I have to do to afford this new toy? So, if you're a price taker, that way I would like to get this new email service, but I can't afford it right now because it's just outside of my budget. But if you're a price maker, you sit there and go, you know what? If I can sell like 2 or 3 more things a month, I can then afford this thing.
Right. Exactly. Okay, so the next thing that's important is to understand your costs. And in business, there are 4 different types of costs based on how they behave. And when we talk about cost behavior...
Behave.
Yes, behave. When we talk about cost behavior, we're talking about whether or not the cost changes depending on your level of revenue. Okay, so... the first type, these are variable expenses. And variable expenses, as your revenue increases, as the number of clients you have increases, this cost increases. So these are things like pay per user software, taxes. Jeffrey just made a face.
I just want to say right here, if you're using high-end software, sometimes this can be really complicated. A cost per user, and most simple apps are pretty much a cost per user, but it becomes this weird scaling thing that happens, and it can be very expensive for certain kinds of software. So really pay attention to, if it's a pay per user, what the actual pay per user is, especially in your higher end software.
Right. So, and a lot of times you have a choice between paying per user for the software and paying a fixed amount per month. And there's usually what we call a break-even point between the two. The next type of expense is a fixed expense. And it stays the same no matter how much your revenue is.
And I think when she says this, I think this is the thing that confuses people, it's like over the scope of a year. Because in theory, your rent could go up next year, but it's going to be the same for the next lease period. So at least for a period of time, it will be stagnant.
Right. So the way that we kind of think about this in accounting is whether or not the cost has a driver. Is there something that makes the cost increase or decrease, or is it just increasing because rent goes up, insurance goes up?
Because, and I think, that's a great way to think about it, because what happens is, it's like if you make, 15 more client, if you deliver 50 more client services a month, your rent does not change. And that's really, I think, kind of the big driver there, right?
Right, exactly. So, I always ask my accounting students, if your UPS is the total cost of fuel fixed or variable? And inevitably it's variable, because the more miles the drivers drive, right, the more packages they're delivering, the longer their routes are, the more the company's going to spend on fuel.
Yeah. And I think too, this might not, rent is one that usually gets put here, but it might not always be true like in co-work space, depending on the price structure. Like if you're getting an extra conference room, or you're maybe there in off hours. I don't know if they're done like timeshares or not, but if you use it more than expected, you could pay more, and that would not be a fixed cost. So just because things are in these buckets doesn't mean that in every scenario that you have those expenses that they're going to be in those buckets. They're just normally there.
Right. And actually, if you rent in a mall, which I think this is part of the reason that malls are dying, it's actually a mixed cost, which means a mixed cost, there's a variable piece, right? So there's a driver. And typically when you're talking about rent in a mall, it's your sales. You're going to pay a percentage of your sales for your rent, plus you pay a fixed monthly rent amount. And so that's a mixed cost. A mixed cost has a variable piece and a fixed piece. Like, for example, most electricity bills are a mixed cost because there's a fixed customer service fee, and then you're paying based on your electricity usage. Okay, so rent can kind of take a couple different forms. And then the last type of cost is called a step cost.
Very common in IT apps as well.
Yes. So a step cost is one that it looks like a fixed cost up to a certain amount of activity, and then the cost jumps up. Yeah. So we see this a lot in email service providers.
Yeah.
Where you pay a certain amount per month up to 2,000 subscribers, and then the next jump maybe goes to 5,000 subscribers. And so from 2,000 to 5,000, you pay a higher amount.
Yeah.
And then from 5,000 to 10,000, you pay a higher amount.
That's why a lot of times when you go into email service providers, and I do this frequently because I'm me, and one of the things they actually, if they have different levels, you just put in a different number of subscribers that will tell you what the cost is. It's not just a list cost. You have to add the variable of your subscriber base.
Right. But typically it doesn't go up for every new subscriber you get. There's a range in which you pay the same amount.
And it's usually in thousands. Yeah.
Right. And this is also true for if you're hiring salaried employees, right? So if you have one employee on salary, you pay a certain amount. But then if the workload gets too big, you have to hire a whole nother salaried employee. Yeah. So your cost is going to jump by another salary.
To be able to deliver the services.
Exactly.
And the thing to keep here is, once again, this can get confusing too, because you think of Amazon Web Services, and it ends up falling into that mixed category because you're kind of paying for the processor usage, but it's at a certain rate until you get up to a certain number of users, and then the price changes again. And so my suggestion is, this is, I think, an area where a lot of people do get stuck on. If you do, I would go to our Facebook community, and you can ask questions there. If you go to facebook.com/groups/smallbizlife.
Yep. Yeah. And if you're, if you want to post, explain, what you're paying for and how the pricing structure works, and we'll help you determine what type of cost it is.
Yeah.
Okay. So how much do you want to make? Now, this seems like a lot of people, they never ask themselves this question. How much money do you want to make? How much profit do you want to make per month, right? So kind of what we're asking you here is, what do you want your salary to be, right? How much do you want to take home? And then if you're a service provider, how many billable hours do you want to work each month?
I'm going to be honest here, people. This is something that I've been told several times. Our business owners can set wages, they can set prices. To a point, there's a truth to that. But at a different point, there are certain limitations. you could set your profit to $20 billion here if you want to, but you might not be able to do that.
Right. And that's kind of the thing with this is that as you start kind of going through these numbers, you're going to determine whether or not they're realistic. And at the end, we're going to talk about what to do if you don't think your rate is realistic. But this is the starting point. Yeah. So let's say, for example, that you want to make $5,000 a month in profit and you bill 25 hours per week. Now, you're probably going to work more than 25 hours because you're also doing marketing. You're also doing, you're also going to have time that's not billable. You're going to be doing networking.
In my experience as a small business owner, what you're going to find out is the number of hours you want to work per week is probably going to end up being the number of billable hours in the service industry.
Right. So typically what, in legal, in accounting, I would say like even in coaching, and I think when you're working out your coaching rates,
this is really important.
Right. You need to work in the prep that you're doing before working with the client after, because most coaches, they look at their notes from last time. They kind of do some brainstorming before they get on the call. They have the actual call, and then they're doing wrap up and follow up and sending out notes and things like that. So you've got to consider those extra hours billable time. Yeah. And when you're setting up your pricing structure, you can't just think about the 45 minutes to an hour that you're spending with the client. Yeah. You've got to think about all that prep time in there as well.
Most definitely. Yeah.
So, but let's say in this example, so you want to make $5,000 in profit and you want to build 25 hours per week. So, if there's about 4 weeks in a month, it's actually a little bit more than that, but this is good because this will actually make your profit a little bit higher, right? We're kind of doing it on the low end. So that's 100 billable hours per month. And so 5,000 divided by 100 hours. And I said, we're doing mathing. If you're, you don't have to write all this down. It's going to be in the show notes for episode 90. That's $50 per hour that you have to build into your pricing structure for your profit. Yeah. Now, this doesn't include your taxes. Okay. So if you want to work taxes into this, okay, what you're going to do, talk to your accountant and figure out what your total effective tax rate is. Okay. Your total effective tax rate is your self-employment tax, which is 15.3%, plus your federal income tax and state income tax if you live in a state that has income tax.
And once again, this is not math that needs to be repeated. If you like go to our Facebook group, you can get help with some of this stuff. You really need to do it once when you're planning it out.
Right.
And here's one of the things I'm going to offer to people. A lot of times they shoot for numbers that they need. So they say, maybe you chose $5,000 a month because that's what you need to pay your bills and have a little bit of extra at the end of the month for your family. 5,000 would be the wrong amount. You'd want to do more than that because if you have an off month, which everyone's going to have a cash flow that sort of acts as a cycle throughout the year, it's just a natural thing that happens. Make sure that the amount you're looking for includes more than you need. Because if you have that off month, it will cause you personal cash flow problems.
Right, exactly. And that's the thing, like if you need 5, then I would say that you want your profit to be 7.
Yeah.
Okay. Just because that's going to help you build up some extra cash flow for those slow months.
Yeah.
Okay. But once you know what your effective tax rate is, okay, so let's say for most people it's 30%. So what you're going to do is you're going to take that $5,000 number and you're going to divide it by 1 minus your total effective tax rate. So if your total effective tax rate is 30%, so that's 0.30, then 1 minus 0.30 is 0.7.
Yeah.
Okay. So I would take the $5,000, divide it by 0.7, and that's going to give you a number that's more than 5,000 because what that's going to give you is that's going to give you the total number you need with the taxes included, which in this case If you want it 30% for taxes, then you're really looking at $7,145 per month. So with our 100 billable hours per month, you're looking at about $71.45 per hour to get you your $5,000 in profit plus the money you need for your taxes.
Oh, okay, I have to step in here for a second. That's not complicated math, but that's going to be a lot for an audio podcast, honey.
This is true, yes. So what we're going to do is we're going to record a video and we'll put it in the show notes for this episode. And you're going to do something special for the HQ members.
Yeah, what I'm going to do for the HQ members, I'm going to put together an Excel. There'll be one for makers and one for takers.
Okay.
And essentially, it'll give you the variables to fill in, and it will do the math for you.
Awesome.
Yeah.
All right, cool. And so if you're not an HQ member, but you're interested in finding out more about it, you can go to smallbizlife.com and click on Small Biz HQ and learn more about our monthly membership site.
Yes.
Okay, so next. So I know like your brain's probably spinning after that last part because we asked you to do some division. And and that's okay. So, we're going to do the video to kind of explain through that. So the next thing to look at is how much your expenses. And, I think a lot of small business owners, they don't really look at this very often. We, especially when we started this business, we were very cognizant of how much our monthly expenses are. So you want to go through, you want to list out all of the services that you pay for, all of the expenses that you have, and determine whether those are, are they variable? Are they fixed? Are they, mixed costs? Are they step costs?
And understand too, like if you're like me and you're going to change things sometimes because of changing of circumstances, like say email providers, you can do that, but you might have an overlap cost sometime in those periods.
Right. And don't forget about those things that you pay for annually. Okay. And what you're going to want to do is you can either come up with your total annual expenses and then divide that by 12, or you can take all of your annual expenses and, divide those by 12 and add them into your monthly expenses, whichever is easier for you.
Yeah.
Typically I think looking at your expenses on an annualized basis and then dividing it out by 12, that's going to help you figure out. Cause I know like we have a lot of costs that we either pay for annually or we're on like a multi-year contract.
Yeah.
So like our hosting, for the websites, we actually pay for like every 3 years, I think.
3 years, I believe. Yeah.
And that was just because the deal was so much better, paying for it. I think we pay half of what we would have paid if we paid for a monthly.
And I think that's actually a great strategy for a commodity style of service, like hosting, because you can sit there and risk losing customers, and you're going to have leakage whenever there are renewals, no matter what. But then if they can afford to pay for 3 years at once, you have the stability of having that income. So even though you're getting it all at once and you have to plan how to spend it better, the good thing is for that 3 year stretch, they won't leak.
Right, exactly. So once you've figured out your annual expenses divided by 12, now you've got your average monthly expenses.
Yeah.
Okay. And if you're billing 25 hours per week, right? So that's 100 hours per month. So let's say that your expenses are $3,000 per month. Now, these are not your personal expenses. These are just your business expenses.
Yeah.
Okay. But if your average monthly expenses are $3,000 per month and you're billing 100 hours per month, then that's $30 per hour that you have to bill out to your customers in order to cover those expenses.
Yeah.
Now, if you have variable expenses, there's two different ways you can deal with these. You can either directly bill those expenses to your customers, or you can work them into your hourly rate.
Yeah.
So, for example, like with my, with the CPA firm, with mileage, I can either bill that directly to customers, or I can figure out, what is my annual mileage, divide that cost out by 12 months and add that into my hourly fee.
Yeah.
Okay. So that's how I do it, because I have some clients that, I've just found that trying to bill out mileage is a pain.
Yeah.
But if it's like a software fee that they're paying, then that's easier to bill.
Yeah, I mean, the biggest thing I think Chris and I both like to stick by is the time it takes to do the more complicated is usually not worth any additional money that you can generate from that. So it's best to simplify things and to take the easy path when it comes to billing, because you can spend way too much time doing billing otherwise.
Right. And the way that I look at it is like, there are virtual services that we pay for that some of my local clients don't utilize. That helps offset the mileage that my distance clients don't utilize. So it kind of all works out in the end. Okay, so the last thing that you want to figure into your rate is you want to allow some room for growth.
Yeah.
Okay, and this is where I think a lot of small business owners like completely forget this part. Like you might be looking at your expenses, you might be looking at your profit, but are you budgeting in money for upgrades or for education? Because there are always things that we wish we could pay for in our business, but we don't.
Yes.
Okay. We say, oh, I don't have the money for this. Well, let's work that into your billable rate. Okay. So
that would be almost enough for a computer a year in your example.
All right. So let's say that you want, and it's funny too, because like when you look at, like, I was kind of shocked when I went through and I ran these numbers. Let's say you want $10,000 per year for upgrades, improvements, like conferences to educate yourself better. Okay. So let's say $10,000 per year. Now you're probably thinking to yourself, there's no way. That's a ton of money. Well, if you break down $10,000 per year divided by 12 months, that's $833 per month. And if you have 100 billable hours per month, which is what we've been using through this whole example, that is $8.33 per billable hour.
Yeah.
That is not a lot of money.
No.
So
I just say it's so important to plan for this, because growth will sometimes become necessary, and other times you become irrelevant if you don't continue to grow as a service provider. You need to stay on top of what you're doing for people to be able to deliver a high value product to them, or even a value product. And over time, if you stop upgrading yourself and you stop upgrading what you do for your clients, you're going to push yourself into irrelevance.
Right. And so for us, I mean, this $10,000 number is actually pretty close to what we spend on either equipment upgrades, education, conferences. So, you want to be working this in to your billable time. And what I'd recommend is that, at the end of every month, you look at how many hours you've billed and you put that money into a savings account. So that way you don't, you either don't take it as profit or you don't spend it on other things, so that you have that reserve fund.
Yeah, that's one of the things that we're pretty consistent with. Is not the first word that came to mind, but it's the word that comes there is we like to push non-expense money out of our checking accounts quickly, so we know what we have going on. So I think that's just a great idea. And you get a minuscule amount of interest, but it's better than what you're getting your checking.
Right. And that's the thing too, by removing it from your checking account, you're not considering that operating money. Right.
And even as you start becoming more profitable, it's not as easy just to start spending that money right away.
Right. And that's the thing too, is like, you can also look at your billable hours and say, okay, if I have, say you had 150 billable hours last month, then you should know that $50 per hour, that's your profit. And you should be able to take that home, because you've also built in the money for your taxes. So this is a really good way that you can look at your billable time and say, okay, I know $50 is profit. I know $30 is for my expenses. Now, if you bill a lot more hours, then you're going to build up this reserve towards your expenses. So you're going to, if you consistently do that, then you're going to see your balances go up even when you're taking out your profit.
Yeah.
So I think that this is a really good way to look at it. It's much more simple than some of the systems that are out there that require you to open like 9 different bank accounts to make this work. Okay, so let's add it all up. Okay, so if we said $71.45 for your profit and your taxes, we said $30 to cover your expenses, $8.33 for upgrades and, other wish list items. So if these were your numbers, you'd be looking at $109.78 per hour, or just rounded up to 110. Mm-hmm. So that's what your billable rate would look like. Now, you might be thinking, oh my God, that's way too high. I cannot bill that much for my services. There's just no way. It's not going to happen.
Now, if you can show me evidence of that, I'll shut up and go home. Mm-hmm. And it's simple to do. You go look at your competition's websites and see what they're charging for their services. And if they're not charging anything over $100, $110 might be a bit of a stretch, depending on how well you can differentiate yourself. And some industries, it's easier than others.
But usually, if everybody else is charging like $100 or $105 and you're charging $110, if you can, we talk about this all the time on the show. When you deliver value, mm-hmm. people don't ask how much you charge. Mm-hmm. That is not the first question.
You let them go.
Right.
I mean, it's like there are plenty who won't.
Right. And, usually the thing is, the approach that I take is typically when somebody asks me how much I charge, the first thing I do is say, well, let me tell you a little bit about myself. And I will tell them about all the, especially like in the accounting field, the degrees that I have, the level of education that I have, the awards that I've won, how long I've been in business, how long I've worked with small businesses. And then, once I have fully impressed them with that, then I tell them how much I charge. And they go, oh, that's not bad.
Yeah. And I think the other thing that works for you too, that you naturally start delivering value in conversations before you get to that point. Mm-hmm. So, she's already probably delivered some kind of value to the person, and she's telling them the price after she's given them her credentials and what she's done. You think of it as a sales video. This is why your elevator pitch, should be sort of a mini version of a sales video, except you're doing it live.
Right, exactly. So, when somebody calls me, I ask them lots of questions about their business. I kind of get a feel for other things that they're probably going to need help with that they don't think they need help with. And then, then we start talking about, my experience and, and I found that that's worked really well. It kind of takes off the price shock, for how much I charge an hour. So the first thing is, if you don't think you can charge that much, you have to make sure it's not your fear. Okay. Because I remember when I first went out on my own, I kind of looked at what CPAs were charging and I'm like, I can't charge that. Mm-hmm. That's crazy. And then I went, no, wait, why can't I charge that? Mm-hmm. That's what everybody else is charging.
I got a quick little story about this. So a couple months ago, I was talking to someone in my fantasy world building group who's an author whose sales were sort of lagging and not doing very well. And she didn't know why, because she priced her book cheap. And she's like, it's a good price. And my stuff is really well written. She has great sort of geeky map images, which geeks love. And she's like, she was a little frustrated. And I told her, I'm like, listen, how much does your book cost to a comparable book on Amazon? I'm like, is it more or less? And she's like, it's less. I'm like, raise your prices. And she hemmed and hawed it a little bit, but she had the courage to listen, to take the advice. And as soon as she raised her prices, the next week her sales went up.
That's incredible.
Because the thing is, sometimes people will see a reduced price and think it's a reduced value. Mm-hmm. And especially if you have more value than the other things at that price, you definitely should not charge less than them. Because people, this is the way people make decisions. They anchor and adjust. So if you are above the normal price, they expect it to be of better value. If it's below that price, they expect it's below that price for a reason.
Right, exactly. So, you're going to want to do research to see what other people are charging. And if you're an HQ member, we're actually going to be doing that in the first week of HQ, where we're talking about looking at your competition and trying to analyze what they're doing. So HQ members, look out for that, because I think that that's going to be really helpful for you guys. Okay, so, if you go through and your rates are really out of whack with, what other people are charging. So there's two things that you could do. Actually, there are three things that you can do. So the first thing that you could look to do is decrease your expenses. Is there anything that you're paying for that you don't need to be paying for? Maybe you can cut back on things. Maybe you can pay, maybe it's worth it. You'll get really big savings if you pay for something annually, right? And that'll help decrease that rate. You can increase your billable hours, okay? Which, nobody really wants to do that.
But
right?
It's an option.
But it is an option. And I think the third option is to look for affiliate relationships that are congruent with the services that you're selling. So are there ways that you can, that you can derive revenue? Maybe it's, that your customers are voracious readers. And so you're pushing books on them that you think would, help them become the person that they want to be, right? We talk about, I think we talked in the last episode about, looking at who your customer is going to be at the end of their journey with you. That doesn't necessarily have to be just your products.
And this is another reason, too, why building relationships is important with people in your industry and with people who you think can add value to your customers, even if they're not exactly in your industry, but they offer a service or a product that is directly related, because you can build a really strong relationship for them. Maybe you're even driving sales for them, and you're getting a portion of those profits, and you've come up with a revenue share agreement. It's kind of like an affiliate, and in a way it's like the more advanced level, because you kind of really need a relationship with someone to do that kind of thing. But look for those adjacent businesses that can benefit your customers, because you giving them access to things that will benefit them, that they will like, will make you a better service provider. And if it's an outside type of business, but there's still a lot of direct value to your customers, same thing. Look to build relationships with people that can make your customers' lives better. Because once you have the trust built up, you can come up with agreements that are really profitable on both ends. And maybe they're feeding you some business and you're feeding them some business, and it makes both of your lives easier. And, maybe you can take a little bit less time in sales and maybe a couple more billable hours.
Exactly. And, look for those affiliate relationships and look to see, are there courses that you can develop that will allow you to kind of work with those higher level clients, right? So maybe the basic information is in a course, right? And I think course development now, it used to be really expensive for the platforms, but I know Teachable's basic plan is free.
Yeah.
You're paying a higher fee per transaction, but it costs you nothing to have your stuff on their platform.
Yeah. And they have the same sort of odious sort of terms that Udemy has.
No, Teachable is a much better platform because they can't screw with your pricing.
And the other thing I would look at too, and this is from the IT industrial engineer in me, is always look to be able to minimize non-billable hours. This is a very important thing. And these are a lot of things I like to focus to try and automate out of our businesses. Where can I save time and not be punished? Or the cost of the punishment is less than the benefit gained. So, it's that's why I'm very worried about what type of accounting software can I integrate into our ecosystem to minimize the time that either I or Kristen have to work on that. Same thing with social media. If it's a platform like Twitter, I'm sorry, I'm not posting there anymore. I might go in occasionally to put out a tweet, but most stuff I put there is just,
it's automated.
It's automated now. So just keep that in mind, decrease your non-billable hours so you can work the same number of hours, but have more of them billed out.
Right. And so next month, we're going to do another episode on how to do this for products. So if you're selling if you're selling online courses, how do you do this same process? So, if you haven't hit the subscribe button yet, make sure that you hit that, because then when that episode comes out in July, you're going to make sure that you get it.
Yeah.
All right. So let's wrap up the show by talking about how to avoid risks with this. Okay. And I think you have to make sure that you know what you're worth and what other people in your field are charging. Because I think a lot of times we kind of get this skewed perspective that, well, I can't possibly charge that. Nobody would pay me that much money.
I'm not selling well now because my prices, I think, are already too high.
Right. And it may be that they're too low.
Yeah.
I know, when you were building websites for people, when we had MyTech, that was a big
issue.
You had a big issue.
And I really struggled with that because I thought that's what the value was. But, when I went to the outside, it was probably 3 times what I was charging. And when I would go, and people they would always eyeball me funny. And I thought my prices were too high. And I'm probably thinking that they thought my prices were too low.
Yep. Yeah, absolutely. Make sure that your expenses are reasonable. So look at what you're spending money on. Is that the best option for you?
And I will tell you, for all of the major apps that we use, we review these at least annually. You don't want to really do it more than annually. We might review it more than once annually, but we will make up to a change once a year at the most. But it's like, be aware that just because the one that you picked was the best for you at the moment of time you were in, with those step costs, it might not be next year, or the abilities of the competition might have grown. So always be monitoring what you're using to make sure you're getting the best value for you, because then that helps you provide the best value for your customers.
Exactly. And then the biggest mistake that most people make when they're first starting out is that they set their rates low in the beginning.
That was me.
To try to build business.
And that's wrong. It doesn't work. Trust me.
And the thing is, it's really hard to raise your rates later on.
Well, it's funny too, because I ended up increasing what I was charging people right when Kristen got sick, because I needed to make more money. For new customers, I started getting more business, and I started becoming profitable. And if she hadn't gotten sick, I would have started making money. But that was after I was like, I'm just going to charge this rate for it. And I started doing more business, charging the higher rates. So it really, you can screw yourself.
Right. And that's the thing. And it's like, you can, if you're working with veterans, or you're working with, other groups, nonprofits, and you want to give them a discount, we get to make that decision. But if you set your rates low in the beginning, it's really hard to raise them later.
Yeah.
Okay. And as Jeff just said, with his, his case study about the author that he was working with, people perceive lack of value when your rates are too cheap.
That's just human decision-making 101.
Yep. And so we will link the Great Courses course on decision-making into the show notes for this episode.
And I have to say too, the guy who does that course is exceptionally snarky and a lot of fun. So it makes content that could be really dry and scientific into very humorous and enjoyable.
Yes, absolutely. But that's a great course, and we're really enjoying watching it. So if you have any questions about this, the best way to reach us is to go to facebook.com/groups/smallbizlife and post your question in our Facebook group.
Yep.
Okay. So thank you so much for joining us again this week. I know that there was a lot of content to break down in here, so we look forward to you posting about it in the group. And we'll see you again next time.
Excellent. This was Small Biz Life.